Hello, hello. All right. I am Brett Scott. Diego gave me very strict instructions that I had to provide a very inspiring speech for everybody, which is actually quite a daunting thing. I don't think I'm going to try to do an inspiring speech because James actually did a pretty heart-rousing kind of thing. So I don't actually want to try and emulate that. Also on the program, I was referred to as I think an expert in financial innovation. I don't really think about myself as an expert in financial innovation. I mostly think about myself as I kind of explore economic systems. And that's an ongoing process. You never really become an expert in these things. So it's more like an ongoing exploration process. So perhaps the inspiring thing would be, if I was trying to inspire you, is don't aspire to be an expert in financial innovation. Rather be just try the things out and try and explore them with an open mind of some sort. And that tends to lead to lots of interesting things. This is a book that I wrote. There's a pirated copy of it now, so you can actually get it as a PDF document. There's a PDF copy of my book lying around. And anyway, one question I want to ask the audience, how many people think that they have a decent grasp of the financial sector or some kind of intuitive sense of what it is? Or maybe a different question. Who feels deeply alienated by the financial sector, or deeply like it's something kind of mysterious and ominous in some kind of way? All right. So what I often like to do is I worked in the financial sector in the world of derivatives, which is considered to be a very sort of complicated part of finance. But actually you realize that everything in finance eventually comes back down to very basic principles. And eventually it's all based on this here. At the underlying sort of foundation of all economic systems is human production. People go around and they do things, and they build things. And they use various forms of labor to do that. What's happening here? And technology and sort of management systems to try and coordinate themselves to produce value. And actually a lot of the angst right now in sort of economic debates is that the technology part of this is becoming so powerful that people are starting to wonder whether the human labor element will be removed at some point. I'll go into this one right here, right? But we have a particular form of production in our society, which is capitalist production systems. The clicker being sorted? Yeah, so we go around, we produce things of value, and we use the planet to do that, all right? So all human economies come down to that in the end. But we have a particular way of doing this in our society where we utilize monetary exchange and markets to mobilize the process. And essentially you have certain people who own things, own production facilities, own technology, and then they basically hire other people to do stuff for them, to use that technology. And they utilize monetary exchange to do that. So you utilize monetary exchange to mobilize the inputs to production and to then distribute the resultant goods on markets. And when you start to understand the system, you start to see that the financial sector itself is plugged into all this production. And the basic art of finance is how do you write contracts about future money in order to mobilize present labor and present production. And this is what the whole sort of financial system is specializing in doing. It's a realm of people writing contracts about things to try and get a bunch of people to come together and build something that can then be sold on a market. And you start to realize if you can start to control these flows of money, you can start to control how people move around. It's a very creative force. You can start to mobilize different parts of the economy. Is that kind of like a decent, do you guys grasp that concept? Is that new to you, or is that okay, cool. So the monetary exchange part, if we're starting to think about how we try to alter the money system, one of the first things that has a decent definition of money itself. And you guys will intuitively understand this. Most monetary exchange, or monetary exchange, is essentially you give something that has real value, an actual good or service that you produce with your body in some kind of way. And in exchange, you get an abstract token that enables you to gain access to a pool of other people in the future. All right, the pool of essentially gain access to their labor in future. And this is a sort of a key, called like a social algorithm that makes sort of a capitalist system work. But in our modern system, We have two basic means of recording these monetary claims. People often think about these physical forms, we might call bearer instruments, where you have these objects that you pass around. And sort of the act of getting rich in the system is literally physically hoarding these physical objects. But the much more important system is these ledger systems, where essentially monetary claims are just written down as data in books or in databases. In the old days, we had actual books that recorded who had what money, okay? And this is how essentially old banks used to operate. And in these systems, the money doesn't technically move around. All you do is you communicate with the person who controls the ledger that records who has what money, all right? So how the system works is that you have an account, and then you have a communication system with the person who controls that account book, okay? And then you communicate with them. In our modern system, this takes the form of giant databases controlled by commercial banks. So every time you're using your card or using your internet banking or using any form of banking services, you're essentially sending messages to these databases requesting that these large financial institutions alter your monetary score. And this is how you move money around or mobilize it and use it for various things. This is a slightly abstract slide, try to kind of give you kind of a bird's eye view of this system. So this is the UK system, so this is not the Euro system. This is a person sending messages into the banking sector, requesting that their bank alter their, essentially edit databases in order to basically pay somebody else. So for example, I'm trying to pay, I have an account at Halifax, and I'm trying to pay somebody at HSBC. I send messages to Halifax. Well, Halifax doesn't actually exist anymore, I don't think. So let's say Lloyd's. I send messages to Lloyd's, and I'll ask them to say, hey, I'm Brett. I can prove that I'm Brett. Please can you alter my score, and tell HSBC to alter the score of the person who has an account with them. All right. So essentially, money in our modern system moves through the editing of databases controlled by private banks. Okay. And then there's a whole other system with a central bank, and there's people from like Positive Money and various monetary reform movements who can explain much more about the details of this, because in this process, banks can create money as well. But this is the kind of the basic setup we have. And the way people experience this system is you have a certain relationship to it. So this is a photo I took in Frankfurt of Commerzbank, from the outside of Commerzbank, and this is a photo from the inside of Commerzbank, actually from the urinals, looking out in the city. And it's quite a good analogy for how the way people experience the financial sector. If you're on the outside, it seems like this giant, daunting kind of thing, and you have to interact with it via a whole bunch of essentially interfaces, menus, and rule systems that the banking sector itself has set up. And bureaucratic systems more generally work like this. They set up these interface systems that then people come and learn how to use them and interact. But if you're on the inside of these systems, you kind of like look out onto society, and everything's abstracted because you're operating at such scale, right? So you don't see individual people, you just see giant kind of like abstracted masses. And you probably are modeling them on Excel spreadsheets. And bureaucratic systems all over the world have this kind of dynamic to them. And you can automatically see there's a kind of a power dynamic here. People who are able to control these sort of interface systems have large ability to alter the entire way whole sections of the population experience their world. So one immediate impulse, if you're thinking about alternative finance systems, is how do you alter this power dynamic between those who kind of control the inner rings of this and those who have to interact with it? Or can you create systems where actually everybody is sort of on some kind of equal level? All right, this is a Barclays branch. I'm just kind of reiterating the point I already made. All these banks have set up these kind of interface systems where they funnel you into a system. And these guys at these counters have no idea who you are. They essentially are there to input your data into a data processing system. All right? And a large part of, James has already critiqued stuff on the technology sector, but a large part of what the so-called fintech industry is doing in London or all over the world, like the financial technology companies, essentially specialize in further automating this process. And they basically seek to automate two different things. They either seek to automate the internal processes of financial institutions, so like saying, how will we automate the process of making a decision if you should get a loan or not? All right, so that's like one element, the automation of the role of financial professionals. Alternatively, they seek to automate the user experience layer, like how you touch the sector, essentially. So there's a lot of work around, okay, rather than going into the branch, you can use your mobile phone, or maybe you can use your fingerprint to send messages into the banking sector. And this is what a large part of the financial technology industry essentially calls, quote unquote, the future of money. It's basically automate the existing financial sector, all right? And actually, probably what they're going to do in the process is further alienate you and further be able to actually essentially control how you experience the sector. So be very skeptical when you see all these like giant claims made by the fintech industry about how they're revolutionizing banking. They're essentially actually increasing the power of banks often, in my opinion. I don't know if you'd agree with me on that, James, but so what I'm going to try to do is show you some sort of alternative approaches to think about how you could, I'll talk about this now, alter the banking sector. But before I do that, one quick thing right now. One of the dynamics going on right now in the banking industry, you'll start to see the EU's putting stuff out about this as we speak. The financial technology industry and the banks themselves are trying to remove the option to use non-digital forms of payment. All right? They have extreme economic interest to do this and various agendas of why they want to do this. But you'll start to see this kind of thing going on all over the place. These huge campaigns to try and get rid of any kind of competitor to a digital system that the banks themselves can control. So if you want to read up about this is an article that I did. I've done a bunch of stuff on this, the dynamic of getting rid of cash. But I'm not going to focus on it now because I want to go into the innovation parts. So I'm going to try to show you a bunch of different approaches for how you might change money systems. So this is the first one you've already spoken about, which is essentially change how it feels to interact with the existing monetary system, like so via like cool apps and stuff. All right, it's pretty shallow. Maybe it's cool. But let's look at some deeper ones. Okay, one of the things people got very excited about recently was cryptocurrency and blockchain technology. What's interesting about blockchain technology is that essentially it alters the dynamics of who gets to control these ledger systems. All right? That's really what the whole thing about it is. It doesn't necessarily do anything else other than that. It says, well, maybe what we can do, rather than having central intermediaries controlling these big ledger systems, these big database systems, we might have a decentralized network of people who can do it. All right? That was what Bitcoin was, and a lot of the innovation around cryptocurrency or blockchain technology more generally is looking at that. There's a whole bunch of stuff about changing the dynamics of who gets to issue money. All right, so monetary reform, people are already looking at this kind of thing. But for example, mutual credit systems are an age-old form of money, which essentially are about community creation of money via credit. Okay, we can delve a bit deeper into these later. You can change what the money tokens are redeemable for. So for example, local currencies are saying, okay, we can take an existing monetary unit and limit the sort of geographic scope of where it can be used. We're only going to be redeemable within a particular neighborhood. So you're changing what it can actually be used for. There are sort of other kind of more esoteric systems where you're changing certain internal properties of the money. I'm not going to go into that. You can look it up, like demurrage systems. You can also find ways to bypass monetary exchange entirely. So the whole sort of gift economy world is about saying, let's not base things on exchange, let's base things on forms of informal gifting or perhaps formal gifting. And then lastly, what people like Triodos and stuff are working on is, well, maybe you don't have to change the money itself, rather focus on changing the financial institutions who dominate the monetary system, all right? So if anybody gets involved with a positive money, like David, who's running a session today, a lot of this stuff is about rather say, how do you change the existing commercial banks? Or alternatively, how do you start new types of banks that issue credit in a new kind of way? And so this is like a sort of a whole range of things, and you can start to think about how you might combine these together. I don't know how much I want to go into blockchain. Who's got like a sense of blockchain already, or like what's going on? Maybe there's no chance in hell I can ever actually go through it in this amount of time. I'm gonna put out one word of caution. There's like a ton of stuff being written about blockchain right now, and about 80% of it's bullshit. All right, so that you have to have an extreme critical eye when you're looking at all the stuff written about blockchain. But at the same time, don't dismiss it. It's important to go and engage with what's happening in this blockchain scene and to try and think about how you might be able to use it. So it is actually an important technology, but a lot of the stuff that's being written is incredibly uncritical. The basic dynamic of blockchain technology. Sorry, I'm a bit chaotic today, as you might notice. This is the existing system, right, where you have essentially people interacting with a centralized oligopoly of intermediaries. What the Bitcoin system tried to do was to say, well, you can have a similar kind of thing, but rather than having these private intermediaries who control all these private databases that they edit, why don't we have a giant sort of public network of people who maintains a public database of who is what? All right? And you can then interact with it in a similar way. You sort of send messages into this network and you say, I would like to move money from my account on this database to somebody else's account in this database. But rather than having to contact the bank to do it, we're going to contact this sort of distributed network of people. All right? That's a very crude description, and there's many problems with Bitcoin, but that's the basic gist of it. And people have started to think about how you might use this generalized concept of a database system that's recording an account of what's happening, but that's not controlled by a single party. And you might, for example, start to think about, could this be used for sort of decentralized cooperatives or issuing shares and those kind of things, and collectively maintaining, for example, an alternative Uber. All right, that's not controlled by a few guys in Silicon Valley, but that's actually controlled by the drivers who actually work for the organization. So blockchain technology we can discuss further in the sessions. Just one quick note here. The blockchain scene is part of a broader array of activism and political thought that's been going on since the 1970s, 1980s, around hacker culture and more generally trying to make sure the internet itself stays decentralized in some kind of way and doesn't become a giant panopticon that monitors you all the time. So in some ways, the blockchain is quite an interesting thing because it's taking financial critique, but also internet critique and melding them together. And you have to sort of draw on both of those traditions to understand what's happening in that blockchain community. I'm going to flick on now, and sorry I'm going a bit fast. One really cool, going away from the blockchain stuff now into the sort of mutual credit systems, one really cool project to look at is the theis. It's run by a guy called Giuseppe Laterra in Sardinia. And essentially, it's a mutual credit system where, I don't have time to necessarily explain the dynamics of mutual credit, but he realized in Sardinia there was a lot of small businesses who were underserved by existing banks. And so he went around and said, hey, rather than relying on trying to get short-term credit from these banks, we can get together in this sort of collective, almost like a collective community bank and issue each other credit and basically give each other goods on credit. And then he runs a system that records them going into debt with each other and coming out of debt with each other and creating these sort of circular flows. And it's one of the most successful examples of a mutual credit system. There's hundreds of thousands of transactions that go on it. So I'm just going to flag it up for you to check it out. If you want to check out some cool examples of local currency systems, the Brixton pound and the Bristol pound are two well-known examples in the UK, but there's many of these systems going on right now. And right now also the technology to build these is getting much, much easier. So there's all these kind of plug-and-play systems where you can go and say, I want to start one of these in a local area, and I'm going to download some open source technology that already exists and be able to implement this without having to build all the technology myself. So these are getting much easier to implement, and I'll show you an example of open source technology. But what we're going to start maybe thinking about in the sessions is how you might actually start to hybridize these different approaches. So for example, could you have a blockchain-based localized mutual credit system, for example, you know? Or is that getting too complicated? I mean, one of the problems with these innovations is that they're always going against an existing system already, right? So doing one change is hard enough. So if you're trying to then do multiple changes at the same time, that can be quite difficult. But this is one of the things that you're thinking about when you're trying to engineer alternative systems. Do I want to make it sort of slightly different, or do I want to make it very, very different? And these are, I guess, design questions. This is an example of people trying to use blockchain technology for local currencies. Right? This is a group based in Israel called Kolu, who essentially are building these apps that local communities can take, implement a local currency, but then have all the sort of processing of it done using the Bitcoin blockchain. I won't go into the technicalities, but it's an interesting example of this hybridization attempt. And lastly, I'm going to quickly make a quick note on these gift economy systems. One of the interesting things to think about is how you might start to hybridize these exchange systems with gift economy systems. And gift economy systems have a very different kind of ethical structure in a way to an exchange system. So large thing, for example, what a mutual credit system is trying to do is to say, we don't object to the idea of people exchanging. You know, what we're trying to do is make the process of exchange more fair. And the basic sort of ethical structure of exchange is I do this and then you do that. It's this kind of like conditional type of relationship. Whereas gift economy systems change that. They say we're actually going to make it, rather than saying these exchanges are conditional, it's going to be based on unconditional flows of goods and services. So we just give stuff without any explicit requirement for people to give something back to me. So you can see it's quite a different challenge to build those types of systems, but potentially these types of things can be fused together. And I'm now waffling a lot, so I'm going to get off the stage, but hopefully this has given you some indication of some cool things going on, and we can discuss in further detail in the workshopping sessions. So that's me for now. Thank you.